All right, what's up, team? It's Ruben from TGE, and I got a message saying I have a $10,000 account and I struggle with holding onto losing trades. Okay, so this is a difficult question to ask because, or a difficult problem to solve because I don't know anything more than what is a losing trade. You got to ask yourself those questions. For me, a losing trade are a set of parameters, and you have to think of it more like a sport. Okay, trading is a sport. So what I mean by that is, like, I play a lot of soccer. So when I am playing soccer, there's a lot of things to take into consideration. Where how much running distance do I have? Where are my teammates? I have somebody coming towards me. Can I run forward, have the speed for it, or is it better if I just pass and then run forward? Like, there are so many variables, right? And you have to kind of make those decisions on the fly. Like, it's not always black and white. You have to you have to ask yourself a set of questions and just kind of see where, like, if the core fundamentals have been invalidated, and then everything else after that. So in here, I said you have to make some decisions before you cut the trade. I said, first, how much time do you have in the contract? So this is a really big one for me. If the contract is less than 3 months, you need to be more critical about your decision making skills. Okay. And so what I'm saying here is, like, we trade contracts that are 3 to 4 months out, and so our trading really has to be dependent on a few other factors. I said, what is Gextron levels telling you? So Gextron is our internal software tool that it shows us, like, things like gamma exposure, delta exposure, all these things. That's TGE Max software tooling. So, like, it kind of gives us key levels. Essentially, it's giving us key levels of the market based on option flow data that is happening right now, right? And then I say, are we in negative territory or positive territory? So we have clearly, like, a bearish sentiment and bullish sentiment. So we need to figure out, like, where is it in the key level spectrum? And if we're long, then okay, maybe let's check the key levels to make sure that we are in a positive environment. If we're negative, then maybe it's switching over, right? That's our first question. Then the next question is, what is the overall delta exposure saying about the market sentiment, about that security or that ticker? And what I mean by that is, like, we'll take a look at, like, option flow data, like Market Chameleon. Let me see if I can pull it up. Market Chameleon. Okay. So here's Market Chameleon. And we'll take a look at the option screener here. It says option block trades. And we could take a look at any ticker that's coming across. I probably should add this in Gextron, to be honest. I don't know why I haven't added it. I could do it. But nonetheless, this is what we're using to kind of figure out option flow sentiment, like, and then also the delta exposure, right? We could do that with Gextron. Gextron tells us the total delta exposure levels if we're bullish or bearish, but we can also figure that out here with the trades that are coming in at what level of delta, right? Okay, so there's that. Then there is then we're analyzing the tape. So this is more talking about, like, the time it sells, the order book, like, are buyers stepping in at the moment? If they're not, that could be kind of a sign of weakness, depending on what you're doing, like either selling or buying long. And then I said, is there enough delta probability? This is really important, right? Because when we're buying contracts, we're looking at contracts that are 38 to 25 delta. Those are the highest probabilities to get from out of the money to into the money. And that's the main objective that we try to get with trading options. We want to we want to get a strike that's out of the money and that's going to get into the money as soon as possible. That's the main objective. But once it starts to trickle out of the 25 delta, if it gets lower on the delta, then the probability is lower. And there's a very unlikely chance of it coming back. If it does come back, which is possible, but it has to work harder because you have theta working against you, and we don't want that. So I said the probability of recovery is significantly lower than if you were sitting at a 40 delta. So this is really, really important, right? So a lot of this stuff is like if these start to get invalidated, then we're like, okay, it's time to cut the trade off. It's just not going to work. We can always find a re-entry. That's not a problem, right? That's the kind of mentality that we have to have and that we have in TG Max. We need to be like, okay, it's okay. We're going to cut it off. If it sets up again, we'll take another shot at it. And I said, how's the trade affecting your overall portfolio? Is it just another position or is it taking a punch to your face? Okay, so like this is really important, right? Because if you have a trade that's 3%, that can take a hit. For me, that's a hit. Okay, that's a punch to the face. But some folks out there, some traders, they like to put 20% of their portfolio on the line. Hey, you might want to consider taking that. Like, do you know what your max the daily drawdown is? If you don't have that, you need to cut it out. Sometimes we have trades that are less than half of percent. And so we're able to just kind of sit on it and see what happens. We like the risk to reward ratio. We like the potential return. Maybe we'll just sit on it. That's not going to affect us in the long run, right? We have plenty of capital to play with. Okay. So I said, if one trade is putting your entire portfolio at jeopardy, you've got a serious problem and you need to fix that. You need to fix it fast. You should cut a trade right away when your assumption is changing, right? So everything's pretty much based on assumption and on the data that's being provided or that you're receiving, right? The input. I said two, are you holding a lead? This is different now. Okay. Lead contracts is a little bit different than the thinking, right? When we buy a lead, that usually means that we're believing in long-term thinking, like think like Apple, Nvidia, Microsoft, Google, whatever, right? But even with leaps, if the fundamental outlook changes, you cut the trade. On the previous video, I talked about how ELF punched me in the face, punched me in the gut. But the reason I cut the leap trade is because, I think I actually said it right here. I took a trade on ELF. The stock had strong forward guidance pre-earnings, right? Before earnings, we did the analysis inside TGE Max. We said, awesome, the forward guidance looks like it's growth. They're expected to be quarter over quarter, year over year. Revenue is supposed to grow. Wonderful. It's currently undervalued. And the option premiums were looking healthy. But in the recent last earning report, they lowered their forward guidance for 2025. And so because of that, my thesis changed. Someone inside TG Free asked me, since it's a leap, are you still holding? I said, hell no, I'm not holding that sucker. Okay, I closed that thing first thing at market open because the thesis has changed. My thesis was strong forward guidance for the year 2025. Let's get a leap. Let's capture a quarter or 2-quarter movements worth of price action and see if we can capitalize on that. But that was not the case. The guidance got lowered. So when I cut my trades when my thesis changes, and my thesis changes when the facts change. It's just that simple. And that applies as well for short-term expiration trades. Okay. Another thing that you have to ask yourself is like, are you oversized? Right? If you're oversized, you got a big problem. Okay. Most traders don't cut losses because of greed or the number one reason, poor position sizing. And so the real issue isn't that they believe in the trade, it's that they put too much on the line and are now hoping, right? So you enter hopeism, okay? Because now you're hoping for that trade to come back to life and you just don't cut it, okay? And I get it. I've been there, done that, learned my lesson. Move on is the best thing, okay? Move on. I actually wish most traders had an undersized problem instead. Okay, a lot of traders that I come across with and I talk to, their biggest problem is oversizing. It's just an emotional thing. They're coming from a place of desperation and greed and just like it doesn't work out. Let's be clear. If you size correctly, a losing trade shouldn't stress you out. And that's true, right? For example, if I asked you for $1 right now, you wouldn't care. It's insignificant. You can make $1 in the real world, right? And that's how you should feel about your trades. If you're emotionally attached, too oversized. And here's a tip. If you enter a trade and immediately feel anxious, you need to cut it off right away. Not in an hour or let's see what happens, like immediately. And I've been guilty of this, okay? I'm like, oh, I oversized more than what I should. Okay, let's see what happens. Because you see a little bit of green on the P&L of the trade, you're like, let's just see what happens. Maybe it goes my way. And then it doesn't, and then I'm like regretting that decision. So just cut it off right away. It's the best decision. The market doesn't care about your hopes, and neither should you. Okay? It's not like you shouldn't care about your hopes and dreams, okay? It's more like you want to react to data and be emotionless because this game is about being systematic, mechanical, and not letting your emotions get involved because then that is where downfalls happen for most traders. And that's why most traders cannot succeed in trading because their money is emotional. It's an emotional subject. You work hard for it, and to see it go away in a matter of seconds, yeah, that hurts. So the more you can detach yourself from that, the better. So just be more reactive. It's a game of reaction. In soccer, we have plans, we have strategy, we have a strategy, but sometimes it's very situational, and I can't just be like it has to happen this way. We have to be reactive at the time that things are happening. Sometimes people cross the wrong way. This and that things happen, and so reacting is the best behavior that you can do, and just be emotionless about it. That's okay. Um, I say if you're in TGE Max, you already know the strategy. It's built into our process. If you are join the private community and get access to the exact tools that I'm using. Yeah, that's pretty much it. So like that's what I would recommend if you're holding on to losing trades, whether it's $10,000, definitely $100,000. Like you cannot afford to lose onto trades unless the thesis has changed. And the thesis changes only when the facts change. Okay. Keep it very simple. Don't get emotional about it. If you're too anxious or feel like too much pressure, cut the trade off. You're probably oversized. Like I said, it should feel like you're giving me $1. It should be insignificant. But that's it for today. If you want to work with me directly, get some coaching, and get access to the tools that we use, check out the link below, and then I'll also put a link on the community. So see you then.